Hi guys, how's it going? It's a lot. I'm checking. Welcome back to my YouTube channel. In today's video, I'll be doing a portfolio update because I did add 2 stocks and 2 ETFs, and just stay with me to see what those 2 ETFs are and those 2 stocks are. I did mention in my previous video where I was talking about mixing out my TFSA that this is where I am. I am no longer contributing to my TFSA because I have mixed it out, and that's where I was investing most of my money because that's where my ETFs are. And then in my red account, the ZAR account, I did not have a lot of holdings because I was focusing on my TFSA. So now that I have mixed it out, I have money to look into other portfolios and to also add other stocks. I did mention that I want to be more in growth than dividend investing, and also because during my investment journey I've actually realized that growth investing can make you more money than dividend will ever make you more money. And that is how I am now investing after mixing out my TFSA. And I do understand that you do have the privilege of buying fractional shares. Like if your share price is 100 rands and you have 50 rands, you can buy and it's gonna go through. But for me personally, I just feel like that does not go with what I want, because I don't want to have a lot of companies or ETFs where it's 10 rands, 10 rands, 10 rands. I don't want that for myself. If I am going to invest in something, it should be a significant amount of money, also because the returns are also significant. So I've just been focusing on my TFSA, and in my ZAR account, I was not so much heavy on it. I think I was investing only 25% of my investment amount into the ZAR account because that's where I have individual companies, and all my ETFs were in my TFSA. So like I say, now that the TFSA is locked and I'm only going to continue with it in the next tax year, which is next year March, then for now I just took the decision that, you know what, I need to focus on my USD account and my ZAR account and a bit of crypto. And I have added ETFs in the USD and some stock. Yeah, and then in the ZAR account, I have added 2 ETFs and 2 stocks, and we are gonna go into my portfolio and see how my portfolio is doing and what those stocks are. And guys, before I go into my portfolio, I just want to say this. I know that we have different investing styles, different investing strategies, and different financial goals, right? But what makes most sense is that if you can have ETFs in the TFSA, have them in the TFSA, because you are then taking advantage of the tax benefits, right? And this is what I say all the time, that you might think 20% is nothing because you're only getting dividends of 100 rands, and that is only 20 rands that SARS wants, but that goes a long way, you know. So what I would just suggest is that if you have never thought about the TFSA, or if you were not knowledgeable about the TFSA, then just make sure that the next time you buy ETFs, buy them in the TFSA, because you are saving, and that is you actually getting all your money, all your returns, and Uncle SARS is not touching any of them. And for those who don't know, guys, we do have a limit in the TFSA. Everybody has access to this. You just need to open the account, and if you have Easyequities, you already have access. And if you have Stash, that is TFSA, and the banks also offer some TFSA accounts, right? So in Easyequities, you have access immediately. You are set up, you have access, and have your ETFs in that account. And we do have a limit, 36,000 every year. You cannot invest more than that, because whatever amount that you have invested that is above 36,000 is going to be taxed. But what I'm just saying is, have your ETFs in the TFSA if you can. I know that there are some gold ETFs, I'm not so sure if it's all of them, that you cannot have in your TFSA, but other ETFs you can have in your TFSA, and just do that. And what I also like about the TFSA is that, understanding that there is a limit, you are going to focus so much on it and you're going to mix it out. And I just feel like it's then encouraging, you know, you are going to focus on investing in it, and that is you actually working towards achieving your goals. So I just think somehow it programs our minds to work towards our financial goals. And in as much as we have different investing styles, different investment goals and financial goals, but having a TFSA, guys, is very, very important. So this is my ZAR portfolio, and currently I have 5.63% in capital gains, and those gains are actually amounting to 1,300. So I only have 24,000 invested, including the gains, right? And like I said, I was not focusing so much on this account, and that is why I only have 24,000 invested, and it only just skyrocketed now when I maxed out my TFSA, because I was not too much into it. Like I said, I was only investing 25% of my money into it. And then the holdings that I've always had, like I've always had before mixing out my TFSA, is this one: Invest S&P Infotech and XOXO, First Rent, Premier Group, Storage, and Tungela. Those are the only ones that I had. And then I added Capitec, and then I also added ShopRite. These are individual companies, and I added MSCI World and Signia MSCI US, right? Like I did say that I want to be more onto the growth side of investing, because that is where the money is. Dividends are nice, guys, but if you're just going to be honest, if you can have a company giving you 50% in capital growth in a year, and you have a dividend yield company giving you 8% and maybe 5% in capital growth, then you investing in a growth stock or growth ETF, you're going to make triple what you're going to make in that dividend paying company. So that's where I am. I'm just focusing on that, and also understanding the age. It is a factor when we invest, because remember, we are investing for retirement, so we can set ourselves up when we retire, right? I am currently 26 years of age, and how many years do I have? 34 before I retire, if not 40. That is a long time. I can invest for growth, and should anything happen, like for example, now I'm investing in Capitec. Should anything happen to Capitec, I can take my losses and invest in other ETF or other stock that I know that is performing well, and I can recover my losses. So I just feel like if we can approach investing from that lens and understanding the time we have in the market, we are actually going to invest way better for ourselves, because investing is long term. At the end of the day, you are not investing because you want to make so much money in the coming year, or you want to take the money and you want to retire. We're not looking for that. We're just trying to set ourselves up for retirement, and investing for growth and taking advantage of the time you have in the market is actually going to put you way ahead. Now, the reason why I chose Capitec is that in the banking sector, Capitec is the best performing stock, right? If you can look at their 1 year share performance is above 60%. That is a lot. And I do have First Rent, but this one is more of a balanced stock, because they only have a dividend yield of I think 6%, and it is more balanced. If you invest in companies that pay a dividend yield of 6%, somewhere there, like anything between 4 and 7, then you can get solid dividends and also get capital gains, even though it's not going to be too much. So I did choose First Rent because it has a dividend yield of 6%, which is giving me balance, right? But then with Capitec, I was like, let me just go for growth. I don't want dividends, I don't want anything else, but I want capital growth, right? And I bought Capitec, and currently I only have almost 300 invested, also because, guys, I just started. And remember, I'm investing in this account and also the USD and the crypto, so I am splitting my money into this 3 accounts. So I only have 300 invested. And then I bought ShopRite. I bought it because this is the leading supermarket stock in South Africa. We cannot deny that. And what I also like about ShopRite, guys, is that it has businesses internationally as well. The one thing that I'm a bit more skeptical about Capitec is that it only has businesses in South Africa. And if not something was to happen in the banking system in SA, we're going to lose our money. That's what my issue is, right? But let's really hope that in the future they're going to expand their portfolios in other countries and diversify their portfolios, because the very same way we diversify our portfolios, is important that these companies also get to diversify their portfolios, and then we gain advantage. Because now if a company invests in or has businesses in South Africa and the US or the UK, if something happens to us here in South Africa, then you know that you do have two countries that are actually going to carry the stock or the company. That's what I like about ShopRite, because it has businesses in other countries. And then with Capitec, I'm just like, but looking at the rate in which they're growing, let's just hope that in the future then we're going to see them expanding into other countries. I don't know what their plans have been from way back, what they've been planning to do. I have no idea. I just added it now and I'm gonna start following it now, right? Remember, it's important that you get to keep up with the companies you have and understand where they are currently and where they are taking you. So I did a ShopRite and I have almost 870 invested in it, and they're currently on green. I mean, they're currently on red, but I did actually realize that they're a bit more volatile because if today I can check they're on red and then the coming week they're on green. But either way, I'm not complaining about the short-term volatility because I do understand that I'm investing for long term. So I chose ShopRite because it is the best leading supermarket store in South Africa, and their peers actually, some are doing well, but do we know that ShopRite is the best? And ShopRite only has a dividend yield of less than 3%, and because that is a low dividend yield, then we expect capital growth from it. So guys, here's the thing. If a company is not giving you dividends, it must give you capital growth. If it's not giving you capital growth, it must give you dividends. That's just how it is. So I went for the ones that have the lowest dividend yield as possible because I want capital growth. And then the ETF that I have added is the MSCI US. This ETF actually tracks 600 companies in the US. If you think about it, this ETF and the S&P one move in the same direction because the S&P tracks 500 companies and this one tracks 600 companies, right? And the top 10 holdings are the same, so they are moving the same. That is why I added this one and I did not add the S&P because I have the S&P in my TFSA and I also have the S&P in my USD account. So I was like, for a change, let me look for something else, but I wanted to invest in the US stock market and I chose the MSCI US. And this one also, guys, it's a growth ETF, and if we look at the 1 year performance, the share price went up by 26%, and for me this is attractive, right? That's why I chose it. And it does not pay dividends. Yeah, I think it doesn't actually. So that's why I chose it. And what I was actually thinking when I was adding this ETF is that, am I not investing in the same things? But I just concluded that, you know what, it's not like I have the S&P and the MSCI US in one portfolio. You get my point? It's in this account and it's in the TFSA. And the TFSA actually, well, the S&P, but they're more like the same. And in the TFSA, I can only invest so much. So for me to continue investing in this ETF, then why not have it in here, even though it's the same? But it is Easyequities account, but different portfolios. That's why I added it. And then going back, I did add the MSCI World as well. This is more diversified than the S&P because remember the S&P and the MSCI US is only focused in the United States. Like, for diversification purposes, guys, if something happens in that country, then we are going to experience losses. But then if you invest in an ETF like your MSCI World, you know that you have spread your money across different countries and countries where actually the economies are very stable and they are a bit more developed, right? So I chose this one, and also because the 1 year share movement is above 20%, right? And I was like, I'm gonna go with this one. So I only added these 2 ETFs and the 2 stocks. And again, I did make a video on the growth ETFs that you can just go and check out. And I do check out these 2 ETFs because they are one of the best performing ETFs on Easyequities and I think in other portfolios as well. So I chose this one. So I actually did my research and I was like, okay, I'm gonna go with this one. But then when I was shooting that growth ETF video, I actually got to realize that I am duplicating some investments. Like I did say, I do have the S&P and then I'm gonna have this one. But if it's any consolation, they are in different portfolios and I can only invest so much in the S&P because it is in my TFSA. So if we look at the MSCI US, already it's up 4%, and the MSCI World is only up 0.45%. So my portfolio is only up, the total portfolio, this one, is only up 5.63%. And the company, guys, holding down my portfolio is the Premier Group. I cannot thank this company enough, because I'm like, if it was not for this company, I don't know where I would be. I honestly have no idea where I'd be, because it is up 58%. That is a lot. And it has been above 40% for the longest time. The longest time. And this company, I'm literally willing to hold it for as long as I can, because I'm also getting growth from it. I don't get dividends. The dividend yield is only 3%, I think. It's close to nothing. So I am okay with having it in here, even though I love dividends, I did say, but I am okay with it being in here. And it's carrying my portfolio, guys, at 58%. And my headaches is Tungela and XOXO. Can you imagine? XOXO, yeah, it's now on minus 12%. This is a lot. This is really, really a lot. And Tungela is very volatile, guys, because one day I'm up 10% and then boom, back to minus 5%. And I'm like, bruh, what, why, you know? But we do understand the situation, and these are dividend focused companies. I do not expect growth from them. But I'm just like, at the very least, give me 1%, you know, at the very least. But it's very much okay. I'm just going to keep on holding and investing into them. But now my focus being growth ETFs, I'm going to invest more into them. So the likes of Tungela and XOXO, I'm just going to buy one share every month, and the rest I'll just see how I'm going to split my money. And another stock that's a dividend paying stock is the storage, and the best. It's up 11.9%, and it has a dividend yield of 8%. And we do know that REITs have high dividend yields. So to see storage performing the best like this, actually, I'm like, okay, I made the right decision. It gives me peace, and it's up 11%. And Premier Group, like I say, the best one. And then First Rent is taking a beating, man. It's up minus 2.48%. The highest it has ever been in my portfolio is only 6%. And I say in my portfolio because obviously if I only invested in First Rent starting from last year, it's not going to be the same as somebody who started with it 5 years back, right? So I'm pretty sure those people are actually getting growth from First Rent, but in my portfolio is only up minus 2.48%, and it's okay. And then at ZAR, like I said, it's down minus 12%. Capitec is down 0.8%, and then Invest S&P Infotech is only up 1.38%. And honestly, guys, this one as well, I'm like, why are you not giving me what I want in my portfolio? Because if we look at the 1 year movement, it is up 30%. I know I only invested in it, when was that? Like a few months back, if not 6 months. Well, I do understand that, but to just give me 1%, I am not happy. But I do understand that somebody who has started with an ETF company from long time ago, they are reaping the benefits, and that is why we say investing is for long term. So my portfolio looking like this, actually I am very much happy with it, because I see where we are going, and in the coming year I expect it to look way better. Once my weighting in my growth stocks and ETF is high, that performance is going to look way better. But as for now, guys, I am very much happy with how it's looking. I do not have any complaints. And the next update I'm going to make is going to be on my total portfolio, where I share how much I have invested and how it is performing, because it is looking good, guys. I don't want to lie, compared to how it was looking like last year when I shot how much I made on Easyequities. I think I was up only at 2%, and understandably so, because my focus was onto dividend stocks, and dividend stocks, guys, weigh down your portfolio, right? So I only had a growth of 2%, but then now in my ZAR account I have plus 5%, and then in my TFSA I think I'm up 11%. And yeah, my portfolio is looking better. The total one is looking better, and I cannot wait to make that video, because I want to share that with you guys, and I just want to share how I have progressed and how moving from dividends gradually to growth has actually improved my portfolio. And that is why I'm very much confident that now that I am focusing on growth ETFs and growth stocks, actually is going to look way better in the near future. So yeah guys, that's it on my portfolio update. I really hope that you have enjoyed it, and I just hope that I'm not changing somebody's mind about dividend investing. But if the reasons make sense to you, then maybe you need to move from dividend investing to growth investing. But that is also not to say you must sell your dividend stocks, right? Thank you guys so much for watching. I will see you in my next one. Bye.